Morning. Good evening, ladies and gentlemen. This is Clueless Aid Trading Frank. It's approximately 8:24 p.m. on Monday evening, July 23rd, 2018. This is a Clueless Aid Trading Strategic Market Update. Full disclosure, this is purely for financial education, not for any solicitation or advice. The session will be recorded, uploaded to the Clueless Aid Trading YouTube channel. Very important for all members, new and old, to go out there and check for all the webinars that are posted on the YouTube channel. I do not do written blogs. I do video blogs, what we call video casts, which go out there and paint the picture of my forecast of what I think is going to happen with a couple of very, very incisive comments on the market and the overall sentiment in the market. More importantly, go ahead and spread that word to all your friends and colleagues who would like to take advantage of the resources provided, the very beneficial resources provided at Clueless Aid Trading, and they can certainly go out and listen to a couple of my videos, including tonight's one, where they can make it, decide whether or not they think that I'm smart enough to guide people through these extremely volatile markets and make profits, which we do almost every day. All right. On that note, welcome. We have two actually new great members. Well, one returning member, back and forth. It's always good to see you, Mr. Fokusan. And then we have MMCT, like that. And who is MD? MD, can you identify yourself, please? MD? I'm asking politely. Okay. Doesn't want to answer. Probably got booted from the webinar because we don't like uninvited guests. How about that? Must be a doctor. Yeah. I got enough doctors in my family, all right? MD. No one even knows what MD stands for, by the way. Bear with me 1 second. I gotta put in MD. Are you gonna answer or not? Okay, MD is out. Gone. Okay. So let me begin. Let's not waste time here. I want to keep this short and sweet so everyone else can listen to it without getting bored out of his mind. First of all, guys, this is a very difficult market. All right? Let's face facts. It's a very difficult market. There are hedge funds who are trading $20 billion portfolios. 20 billion. All right, not 20 million. 20 billion. Or a couple of billion, like 5, 10 billion. Smartest guys in the mind. Harvard, MIT, Stanford, you name it. And they can't trade these markets. They're closing down shop, or they're just like, well, market's going to crash and it's all over and we're going into a depression, repression, whatever it is, a coma. So we're not going to do anything. Or if we do anything, we're going to short the market. Well, guess what's happening to them? This is so-called smart institutional money, guys. Guess what's happening to them? They're losing money. Look at the HFI performance, the hedge fund index, HFRI. They all suck. They're not only down for the year, some of them like Bill Ackman, or I'm not going to even name names before I get sued. Some of the big hedge fund guys are down like 10, 12% for the year. Net in between all the gains and losses, we're doing very nicely for the year. I don't have an exact number. I have my exact number. I don't know what you guys are doing. But we're up double digits for the year, if not more. I'd like to be up triple digits for the year, but thanks to Mr. Volatility, I'm not. But that's okay. I'd like to be triple digit up for the year by the end of the year. Because to me, every day as a tactical trader is a beginning to get my trading account doubled. Now, am I that crazy? Yeah, I used to be like that way back, where I'd literally go in there and shove everything in there in those 1 or 2 stocks, and boy, was I right, and boom, my account would be double for the day. Like literally double. But I'm not like that anymore. I'm disciplined. I am tactical. I am showing people where exactly markets can go. And position sizing and trade management, I teach it very, very well on my advanced coaching sessions, the ACS. I'm not going to teach that to people like a new member politely asked on a phone call or on the Twitter feed. My job is to show you the roadmap, not to drive the car. You better have a frigging license to drive the car. So if you're trading options, you better have a very good, powerful driving record and hands on the wheel, because I am not in any way or form. Just want to be clear about that. I'm going to draw the roadmaps which are dead right, and they are. From the worst possible markets, I've shown roadmaps which are dead right. Now, how are you going to manage that twisty, windy road known as volatility all the way up here, where the markets are going to go, believe me, is your business, not mine. So if you're losing money doing some stupid stuff and selling out in panic and stuff, we all do, by the way, just so you know. But some of us do it a lot less than some of you out there, and you know it. So if you want me to basically drive your car and change your diapers at the most difficult times, well, it ain't going to happen. That's not my business. My business is not to be your advisor or broker or your fund manager. My business is to show you some amazing charts in the most difficult markets that the biggest of the so-called smart money cannot navigate. And my charts are there to guide you. And just to give you an example, did I tweak around this channel? No, I drew this channel earlier on today. Okay, earlier on today. What's today? 22nd? Yeah, well, actually, even, since this morning. And look what the markets are doing. Prepare to be amazed. It is bouncing exactly off that, with futures are up 3.25 points. Is it magic that my channel up here is showing that? No. Practice makes perfect, and I am far from perfect. But look at this chart. So if somebody's trading the market and wants to make money off volatile markets, whether it's a day trade or a swing trade, or stick on and use the tactical discipline to stick with the trade, multiple trades, whether it be a Google, whether it be a Spotify, whether it be a Align Technology, ALGN, whether it be a Roku, Microsoft, name it, bunch of them. You have to, if you're going to swing the trade, Ulta Beauty, Chipotle, up 200, almost 200 points in the past couple of months from the time that we said buy it. It's probably going to be one of the best long-term trades, and I'm still right. Well, if you're not being tactically orientated and you want to be a monkey on a hot tin roof, which I repeat, we all are, because when real money is involved and volatility hits us, and I hate volatility, by the way, okay, but that's a new normal. But I know how to manage my emotions and stay calm while most of you are panicking and listening to CNBC for your guidance. Well, if you want to do that, then you better start focusing on the charts. There's no way around it. So, now, talking about the risks in the market, there's a lot of risk in the market. Look, I'm a big supporter of good old Donald, okay? My New York City boy. Do I think that he's a partial idiot at times? Absolutely. He's a fellow New Yorker, just like me. He's got a right to be an idiot all the time, except I'm not running the country. My opinion is really simple. U.S. business rules the country. They show the country where the economic strength lies. You start pissing on U.S. business, me as a free market capitalist, I'm not going to sit there and say, oh, it's okay. And I put my comments out there in my Twitter feed. Okay? I'm not here to challenge what the big political strategies are. I'm simply saying that's not good. Because if you remember back in the days, when countries and governments did that, we called it communism. Well, that's in a way what we're doing. We're targeting U.S. companies. Right or wrong, whether you like them or not, is not reason enough to go out there and attack them. We're not communists. We're not socialists. We are free market capitalists. You know what that means? So some of you who might not understand what I'm saying, you mess with the financial markets and the financial markets will send you a message that you're not going to like. And it has a couple of times sent a message that they don't like what they're seeing. But despite all that, the strength of the U.S. financial markets, the earnings power, the beauty of making profits of difficult circumstances. I'm not talking about Clueless Ape trading overall. I'm just talking about U.S. corporations also. They're showing us the way, which means the bull market is still intact, technically, but a lot of fragility. And we get these 200-300 point down days, which mashes the crap out of every technical chart that's out there. And we can't do anything about it. So we have to position size right. We have to think selectively. And we have to adapt, get out of things if needed, and re-enter. That is strategic tactical trading. On that note, guys, good night. No, I'm just kidding. All right. So this is your hourly chart, which is I produce these charts on every 15 minutes, every 30 minutes. This is a 1 hour chart on the E-minis. Don't have to be a futures trader, but these are the actual roadmaps, which are telling you whether or not the profit, that nice 30, 40% up or 50% up or 60% up, 100% up on a particular stock, options we're talking about, or SOC or SPX or SPY can disappear in a flash if you don't follow these charts. Now, if you're an actual trader, you have some charts on your screen. Highly suggested that the most successful traders in our community, in our group at Clueless Ape Trading, are the ones which replicate my charts. And the ones which send me a couple of charts here and there with squiggly lines all over them, like, great, but I don't understand anything that you're trying to tell me. My charts are trying to tell you things. And I make them as simple as possible without making it look like a kindergarten coloring book. Well, sometimes it looks like that. With arrows, with lines, supports, resistances, supports, downtrend channels. So you have to train your eye to talk to your brain. So you read these things. You're not going to be right every 10 minutes, but at least you'll be right overall. So I even put bull kill zone. Like if you get here, like, oh boy, you want to get the heck out of Dodge in short. Or if you get up here, it's a bear kill zone. And we're probably going to get up there, because the market shrugged up a lot of stuff. I'm not going to repeat a lot of the things that I talked about and I posted on my real-time Twitter feed. I had a new free trial member today said, I don't use Twitter. I said, great. Why don't you put trades out there so I can look at it 2 days after and then trade it? I said, what world are you living in? And he's a nice guy. He's a very smart guy. So I said, what's the difference? Look at Twitter every night before you go to bed. And you're having a cold beer, a cup of coffee, or a glass of milk, or whatever you're having. Take a look at it, what we did during the day. Set up some of those trades for the next day. I said, no, I like it on the website with the thing. I said, you know what? This is ridiculous. A website, a Twitter platform, it's the same thing, except the Twitter platform, the real-time Twitter feed that we use is the most efficient and direct, because all my members, and that's the first time I ever heard anything from a guy who says, I will not get a Twitter account. I said, great. is the most efficient, timely manner that I can deliver these goods on. End of story. So, bottom line is this is where we are right now. Now, does this mean that we can't make a plunge down? Sure, we can. I'm not going to sit here tonight. I'm just giving you an overall view and give you the minute details of what can happen. But overall, the charts are looking good. This is your 1 hour trading chart. This is your 15-minute trading chart. These are the two primary ones that I use. This arrow is not there for a joke. I did say the market was going to have an inverse head and shoulders and we're going to rise, and we rose. I did say that we were going to rise from here again after we test the long tail hammer reversals. And it's a little bit of a learning process. Not a difficult one. You guys do businesses and work in jobs which are a heck of a lot more difficult and than what I'm showing you. These are long tail hammer reversals. Why are they called long tails? Because they have long tails. Look at that. 1, 2, 3, 4. They're like Chinese firecrackers. Or any firecracker for that matter. It doesn't have to be Chinese. Because if it's Chinese firecracker, we tariff them. Stupid joke, right? Of the day. So bottom line is long tail hammer reversals, which also happens to be this was your, 1 second. And this is important. This is your head, inverse head and shoulder, left shoulder almost touched the head. Boy, that's real acrobatics there, but that's volatility. Right shoulder, retesting that head. So it's a double bottom. It's a double bottom. Can't get any better than that. When did that happen? It happened last night at around 10 in the evening. Okay? Right there, 10 in the evening. Then it created a right shoulder. Now, these patterns are clearly, you need to understand, define technical patterns. I have some excellent videos on my new member introductory video, but more importantly, the YouTube is full of them. There are guys with 10,000 views. I wish I had 10,000 views. I should have 10,000 views on my YouTube channel, given the content, premium content that I produce and the forecast. So go out there and tell all your buddies. Tell everybody. So, but more importantly, they're fantastic YouTube videos which explain all these different technical patterns. Google's full of them. Got to understand them a little bit. You don't have to be expert on it. I'm not. Trust me. So bottom line is this is long tail hammer reversals, and then you have the this is the first head, this is the second head. So it's almost like a triple bottoms when I look at it now. Then you have the shoulders, and then this happened, and now we're getting up to the upper end of the zone, which looks like on the short-term basis, because given the fact it's a 15-minute chart, it's around 28.20. If we break into this zone here, you're looking at 28.28. Now, for people who are clueless on technical stuff and E-minis and S&P, they're like, oh, what does it matter if it goes from 2,800 to 28.20? You know what matters? Instead of you making a couple of $100, maybe a couple of $1,000, you're making nothing. That's what matters. That's why these charts are so important. Not because you're trading the E-minis. It's because they're giving you a roadmap as what your stocks, most of your stocks on the front end are going to be doing. So when the market suddenly breaks down and you're not listening and you're not looking at my real-time Twitter feed, then those profits that you are up, let's say 30% on, let's say you took a trade in the middle of the day, you don't have a setup from the day before, you're going to be down 30%. That means you just swung around 60%. That's why tactical charting is so important. Now, I'm not asking you to do it. I'm doing it. You just have to understand what I'm putting out there. It's your short-term charts, lots of volatility, but looking good. End of story. Intermediate term chart, kind of the 1 hour chart, looking good. If it breaks out here, it's going to be a real fast run up. If we fall real hard and breaks this level, that's why these red lines are there and a big red arrow. If it breaks 2,800, you better, or if I see it breaking this downtrend line at 2,804, or if I get the feeling it's going to do that, I'm putting out a short. We've done that many times intraday and made ourselves the 100, 150% on a flash crash. That like this type of stuff. Now, I can see when it's starting. I don't know if it's going to get there. That's why we are flexible. I will get most of the move, and for newer members, listen carefully. I'll get most of the move on buying a $2 put on the SPX or a 60-cent put on the S&P and ride it to 6 or 4 and double 4 or even 6, which is a double on your money or a 3-bagger. But I will mostly catch the middle, because right around here, when you guys finally start to do it, the market will kill you and go the other way. That's what we do best at Clueless Day Trading. We get in early, we take profits a little bit early, we let the thing bottom, we look to see the internals, what's going on, and then we ride the wave up. We have done it almost every single week. When people tell me that this one red candle is going to completely demolish the market, I say, let's take a look at the simple. This is not even the complicated chart. Let's take a look at the simple 1 hour, what's going on. This one big, fat, ugly red candle is good for some serious pullback in the market. Okay? What is a serious pullback? Not 600 points, 100 points, let's say. And right there, and this was a happening, after market, but right there, the market turns. Today was a prime example. Market, this was 10 o'clock last night. Market opened up here, 6 o'clock. Market opened up here, 8 o'clock, 9 o'clock, boom. And some fantastic trades were made. The S&P calls were up a lot. The 2810 calls, which were on Friday, opened at today at $4 and change. I said, buy them. They went to almost $8, $7.50. Couldn't you have made a nice chump change? I know some traders did. And that was all defined in this chart. This alone was good for almost 80% intraday. Now, let's take a look at the daily charts. The daily chart overall, as I kept on saying, looking pretty good. We are still in this bull flag consolidation. Okay, here we are, and we're moving sideways. If we break the 2790 level, and always, all new members and old members, refresh your memory. Refresh your habits. In the morning, I always put pre-market charts with the levels, which I see is going on. At least you have an idea what I'm thinking. Flash crashes that happen out of the blue. Even then, we know what the downside can be. But flash crashes are the most dangerous ones, right? They just come from nowhere. It could be a tweet, it could be a foreign event, all kinds of stuff. Or now we are in earnings season, it could be an earnings warning. Imagine if Boeing says, hey, we sold 3 less planes. Boeing will be down $6, the market will fall 200 points. But we haven't had any earnings warning. There's no guarantee we won't have. Might. Whichever the case, technically speaking, this is a cup, this is a sideways handle. A cup, and this is a sideways handle. And in through this, as we build through the cup here, many of you have completely mentally destroyed yourself because we have gone through this back and forth over the past couple of days. So what? In the meantime, the internals are showing strong sideways momentum above 80, all that on my Twitter feed. Try reading English. That's serious. Try reading English. I read it in plain English. And this is the only service, Clueless Day Trading, is the one that puts a visual chart with almost every trade, and in many, many cases, a comment, a technical comment of why I think things are doing. I'm never going to compare myself with other services, but I do know one thing, that the content that I produce and deliver to benefit my members is far, bar none, one of the best out there. I have no idea why we don't have 1,000 members. I know why, because we have sucky marketing. And we are getting good at that. Follow us on Instagram, follow us on Facebook, follow us on LinkedIn, follow us on the public Twitter feed, Clueless8FR. Our Instagram account is doing excellent, starting to build up. And tell everybody out there to follow us there. We show performances, end of the day stuff, and it's getting better and better. But aside from that, our digital marketing previously was horrible. That's the reason why no one knew about Clueless 8 Trading. Okay, now, given where we are in technical standpoint, generally speaking, on a cup and handle, we are going to basically break out. That is what I think is going to happen. We're going to head towards 2860. Now, 2860 from where we closed at 2806 is a very decent number. That's roughly 50 points higher. So 50 points from here on the E-minis or the S&P handle is good for 300 plus points on the Dow Jones. What does that bring us? That brings us into the 25,500 area, which psychologically has been a psychological resistance. And I think we get there. I think we get there. I think we get there by the end of this month, which is not too far away, guys. Now, why do I say that? It's because I just feel it? No, I don't feel anything. Trust me. I'm a robot when I trade. And I like to be more of a robot. All I know is the 2860 area is the upper end of this macro channel. Now, people who don't want to dabble in individual stocks necessarily because of all the news events and stuff that can hit you, as a curveball, trade the SPX on the SPY. Not comfortable with this week's calls? Buy it 2 weeks out. I'm not going to tell you. I give you suggestions on the ones I think are going to be the cheapest and the fastest movers. I'm not going to tell you what strategies you should use, how much time you need to buy, because the markets are very fast and very quick. This can happen as quickly as the next 48 hours. But that's a damn good pattern. Now, the last chart that I'm going to show you is the matrix, as I call it. This looks like the matrix, right? Well, for a lot of you new members who are not trained in understanding, in looking at these type of charts, we make it simple. Let's zoom in. Bingo! It's the same chart that I showed you, except this is on the Thinkorswim platform. A little bit. This is the same chart. The same chart. And this is on the Thinkorswim platform. A little bit more technical style, right? So what is this telling us? A couple of things it's telling us. It's telling us that the 50-day moving average, this is the daily, 50-day moving average is curving up nicely. That's exactly what we need to see. Oops, sorry. Let me just choose a pen color here. That's better. Here's your 50-day moving average, the red. The 34-day moving average is moving up nicely. And what else is happening? Well, my trained eye is telling me that this blue line here is it's kissing. And that's the 20-day moving average, which is very powerful. Is about to cross over the 34. Anytime these uptrending lines cross over each other, the markets want to go higher. Now, this crossover, just so you want to look back and say, oh my God, why didn't I do this? We played this whole move. Did I think that the market was going to go to 2,800? No. Did I think it was going to go to 2,770, 2,780? Yes. Look at my old videos, because there was many different simple signals to read. Look at this. Crossover. Does it take a rocket scientist? A child could read this. This crossover happened when the market was around the 2720 level. And then right after that, bang, bang, bang. Big moves. 400 points in 3 days. Now we are overbought and moving sideways. Will we correct and reset? Absolutely we will. Believe me, we will. And that we will should happen from this zone of 2840, 2850. There's a lot of things going on here, guys. Okay. Now I'll take a quick question or two. And if you want some real specific trade guidance type of questions, then sign up for the advanced coaching session or the complimentary training sessions that I do for all new members. that I probably will be doing one tomorrow. I'll let you guys know. And all the content is posted on the Twitter feed, the chat room, and places. Any stock that somebody wants to look at. And please make it quick. I don't have all night, guys. Alexion, you know, it's a beautiful long-term chart. What's not to like here? It's a biotech stock, mind you. It's a biotech stock. So if you're looking for very large profits, you better have very large patience. Okay? This is not a day trade. Alexion's chart is absolutely beautiful. Right there, this chart was drawn way back. We have traded this stock, and I still have it in my biotech basket. If you want to look at this pattern here, this pattern completes itself around 140. This is an absolutely magnificent bull flag stock, unless it's a biotech stock, mind you, FDA non-approval, all that kind of stuff, you know. Barring all that stuff, the stock is going to go up towards the 145 or level or so. But you just don't know when exactly it's going to happen. But so far, it is fantastic. That's a bull flag. Next stock, please. Anyone? Anyone still there? Celgene. I hate that stock. It's so annoying. I really don't. I don't cover it even. I'll just show it to you. Garbage. That's all I got to say. Now, saying all that, can the stock ramp up $10 because they had a drug approval? Yes. It's a crappy looking chart. I have money. I rather waste my money somewhere else. SGMO. Sure. I remember that one. Scientific Games, right? No, Sangamo Therapeutics. Oh, yeah. Another crazy biotech. Never traded it. Looking at it, it is looking like it's under major distribution. But if somebody wants to scalp it, 14, 15 bucks, I actually don't have an opinion on this stock, because this stock could literally, I mean, look at the daily. This stock literally can, one second, let me try to see if I can make head or tails out of this pattern here. I can try to draw a falling wedge. Yeah, it's a falling wedge, but I'd rather be a buyer, technically speaking. I'd rather be a buyer at 12. But let me draw a more constructive line. Bear with me one second. That's the beauty of a technical analysis. You don't need to know anything about a stock. You can just stock, if it pops, is going to 22. But right now, it's technically speaking, it looks weak, technically speaking. Okay. WK. Workiva. Good looking chart. Slow mover. On a daily, if it moves, 1-2 points, but this is a good looking chart. Trend lines are higher. It is I like it. It looks higher, and this is the daily, so I can make it look a little bit more sexier. Excuse my French. So, one second. Oops. And by the way, aside from Celgene, there's a lot of other guys. Biogen's a lot better. Illumina is a lot better. There's a lot of them, I don't know why people are fixated with Celgene. I just don't get it. So if I want to look at it more of a longer term projection, now people say Gilead. Like, why look at these legacy companies which need to acquire other companies, which are the ones that I keep on recommending in order to grow their pipelines? Buy those. So this one, yeah, if it pops, it's going to go to about 28 bucks. Great. Any others from somebody else? This is a good looking chart. I like it. Nobody? Okay.
Frank, could you look at booking or prior Priceline VKNG, please?
Yeah, I know. I trade booking all the time. I don't know lately why I haven't traded it. It's just because look at the chart. It looks like crap.
Yeah,
Trust me.
absolutely.
We have made more money on Priceline than any other service out there. Ask anybody who's been with me. 50, 100 points. We caught a good portion of this move back in February. But this is a very crappy looking chart. Something is not going right. Now, saying all that, they might turn it around during earnings season. Now, saying all that, there's a big fat gap fill here. And that's exactly what it's doing. It's filling the upper gap. The lower gap is 1900, which is nothing for 100 points on this baby. But just the pattern itself, these lines were drawn way back. That's why it showed up so quickly. There is a megaphone pattern, which I call, okay? Called very correctly. And that lower megaphone pattern comes into play at around 1875. So if the stock does break, it's going to break down here. If the stock breaks higher from where we are, it's going to basically get up to about 2200. First stop is going to be the 1534-day moving average. That's around 2080. I'll start taking a look at it tomorrow, what the options premiums and stuff are, because I haven't really looked at it lately. It's there on my screen though. Fantastic trading chart. Next.
How about Apple?
Did you eat one today? Did you eat an apple today?
I did. I eat enough for everything.
Who's this? Lisa?
Yes, it's Lisa.
Yes. That's very good. Healthy woman you are. Apple looks fantastic, if you ask me. Is it mean that it's going to make us big money? Not necessarily. But Apple looks pretty damn good. And I'm showing you purposely, I'm looking at a slightly longer term picture because that keeps us grounded in what's going on without the daily noise. So if you look at the longer term picture on Apple, here is a terrific, I must have drawn this a while back. There it is. Now you see, guys, the apple of your eye, all right? An apple a day keeps the doctor away. So this is looking fantastic. Now, what does that mean? That basically means, earlier you said you'll chart NVIDIA. Well, why didn't you remind me? Because I got way too many things in my head, okay? So what I told you this afternoon, unless you remind me, I'm talking to MMCT, new member, I won't remember because I am truly clueless. So next time, please remind me. Thank you. All right, I'll do NVIDIA in a second. A stock that we trade quite often too. All right, so basically, Apple's chart is damn good. The upper end of the channel, technically speaking, is around 202. I still think Apple's, which I said, like back in April, May, is going to go to 202. And this chart, and thanks for pointing this out, because I haven't seen a weekly chart on Apple, even though I drew it. This channel is beautiful. And this channel, by the time it goes to 202, can somebody tell me where the S&P is going to be? I showed that earlier. Probably close to 2850. That is the next 400 points. Apple will drive it. You know what are the stocks going to drive the market higher? Boeing. I hate using the word safe because in trading, when people say, is it safe to buy it? They should never be a trader or an investor. They should just go away. Safe. The biggest money is made when it's unsafe. There's a high price to pay for certainty. I didn't say that. Warren Buffett said that. By the time everybody thinks it's quote unquote safe, it's over. But I'm going to use that word kind of in the context of what we're doing. Apple's chart looks like a solid risk reward play. If the stock breaks down, we're going to 181, which is not going to be good for anybody necessarily, because that'll bring the 172, the lower end of the channel, into play. But my gut tells me that this pattern, which we have traded, and recently we haven't traded Apple, just in the past week or two, is looking to break out. A pullback for whatever reason, a tweet, a North Korean missile, China war, trade wars, bringing it down to 180 would be a gift. Would be a huge gift. That means the market would be down 300 points, by the way. If Apple's down 10 points, market's going to be down 300 points. But I don't think that's happening right away. Whichever the case, a little back and fill here, 2 or 3 points acceptable, and I think Apple is going to get up here. And if it breaks down towards these levels, that means the market's in real trouble. We can short it nicely all the way to 160. That means the market's going to be down 1,000 points. Okay, but my gut tells me that this nice formation here, back and forth, $1 or $2, it's going to break out. Okay, now, NVIDIA. Good old NVIDIA. Let's take a look at this. Let's take a look at the 1 hour NVIDIA, which tells us nothing other than range trading. And that's another thing I wanted to mention to everybody. I'm basically neither bearish nor bullish at this point. A little bit more bullish, given the fact that everybody's so bearish and scared. Okay? So, but aside from that, I'm just basically trading tactical ranges. What's the tactical range from a trader's perspective? It's quite simple. 256, 244, 12 points. Gets up here, 256, you want to be a seller. If it breaks out over that, you want to be a buyer all the way to 262. If it breaks below, then you can rest assured that the stock will drop to 244. And that's the range. That's your trading range. 256, 244. You don't need high-level technicals to figure this out. So far, the internals are looking A-okay, which means over the short term, the stock has a lot of buyers. The STOs, which are the second derivative of the relative strength index, are showing higher. So that means the stock will most probably hit 254 as early as tomorrow. How about that? So don't chase it here, because here the algos will sell the stock. Now, let's take a look at a swing trade on this baby. And the swing trade gives us a mixed picture. All right? A mixed picture. Remember one thing, and rule number one, never fall in love with the company, because companies don't give a crap about you, and stocks don't even know you exist. They will kill you, they will destroy you, take your money away, and literally leave you in the dust. And you will say, I'm canceling clueless aid trading, right? That's what traders do. Oh, I lost some money, so so what? Make it back. Bottom line is there is a reversal hammer in play. We can see that. I'm seeing it for the first time today. Thank you for bringing it to my attention right there, which is off the 20-day moving average. The 50-day moving average is at 253. Upper end of the range is 254. I just showed you that. But there are internals here telling you that the momentum is starting to decelerate a little bit on the daily. If I just take a quick look at this chart, it's got some work to do. And I'm going to draw some simple stick lines here. It has to enter and break out over the 256, 260 range in order to gather 270. Can it happen? Sure, it can happen. It's a very powerful company. But just by looking at the curvature of the 50 and the 34-day moving average, I am not that enthused with what I see. I would like to see sharply moving averages like that instead of these sideways moving one. All this can change with one single earnings call, but so far it's just a range trading stock. Now DB is asking MO. I have never traded MO, but I'll look at it for you. It looks like crap, even though it's pretty cheap. Philip Morris. Start smoking a pack, man. Stock's going to go higher. I really have nothing to say. I mean, the upper end of the range is 59. Lower end of the range is 54. If you're asking for miracles, it's not going to happen. Every single technical line is going down. Does it mean the stock's going to go lower? No. But it's going to bore you to death, and you can use your money elsewhere better. All right, guys. It's 9:08. Thank you for being here. I love the fact that you guys put on some stocks out there. We took a look at them. Love to do it more. God bless you all. The only thing I ask from you is one thing. Get referrals. Get people to at least try us out. We produce results in the best, worst, in the best and worst markets. Good, bad, and fugly. All right, not just ugly, but really fugly markets. On that note, thank you. Thank you for all your support. See you guys tomorrow. God bless you all.